Bitcoin's in a really tricky spot right now, and people are going to lose a lot of money. There's a big warning signal in the market. It's not difficult to see, but it's easy to miss if you don't know what to look for. It actually happens in every single market, bull or bear. You don't need to be a genius to do any of this. Remember, gurus try to make stuff seem complicated but easy, so you buy their secret. In reality, trading is simple but difficult. Don't worry, I'm going to explain the warning signal you're missing in detail. I'll share every single trade I plan on taking for the foreseeable future on Bitcoin, as well as key levels and price predictions that you need to be aware of. So if you're interested in making more money trading and losing less money trading, then this video is for you. And if you're not interested in that, I don't know what you're doing here. You shouldn't be interested in Bitcoin. It's only really good for making money. And if you don't want that, then I can't help you, because unfortunately it's statistically provable that people who are subscribed to my channel do end up making more money. I do not make the rules, friends. Joking aside, if my content helps and you're looking to trade anyway, check out Phemex in the description below. There's a big sign-up bonus up to like $6,000. And you can support the content on this channel and hopefully help me someday buy a $32 million dinosaur skeleton. We're pretty much almost there with the money we've made on this channel. I'll pop up the percentage progress on the screen right now so you can see how close we are. Start on the weekly to get an idea of the big picture. I know I keep repeating this, but it's so important because people forget. We're in a downtrend, everyone. This has not changed. This one little move up here does not mean we're not in a macro downtrend. This is still a macro bear market, and that has not changed, and that will not change until we get above at least this 100-week moving average. Now, let's get the candles back in because this gives a clearer picture. So the first thing we're going to use is the moving averages for the trend. Super simple. We've got the short-term moving average over here crossing over with our medium-term moving average. For those of you who are interested, I use the 7, the 30, and the 100 moving average. Those are the ones I use on every single time frame, and what they represent is short, medium, and long. So these two are crossing over. This means despite us still being in a downtrend, there are signs of reversal on the higher time frames. Then also the candlesticks always paint a story. We look at them in context. So if we take this local context over here, who's winning? The bulls or the bears? What are the bigger candles? What are the more dominant candles? The greens or the reds? And I know mine are white and blue. The reason I use white and blue instead of green and red is because it's less psychologically triggering for me. Normally green makes me think greed, good. Red makes me think danger, bad. And I don't want that sort of emotion when I'm analyzing the charts. So in this context, it looks to me like the bulls are winning. This big move up here from the bulls is the biggest move up or down of this entire range. This big red candle here was completely recovered, and these current red candles are much smaller than everything else we've seen. Now, it's very possible that we get a giant red candle coming down here. Completely possible, but right now, as far as the data is concerned, the bulls are winning on the short and medium time frames. Let's also take Fibonacci levels over here. We've got another data point, and if you take a look, that's the 382 level. So as long as the price stays above this 382 level, we're looking really good, because what could happen is, let's take our first key resistance, which is this 24.5K level that we've been watching for a while. If price does this huge 54% move up, then comes down only to the 382, which is a very bullish level, because it's only come down like 38.2% of the move up, and then bounces into resistance, we're going to expect that to break and a nice move up into our next key resistance / structural level, which is over here at the 30K. So using the higher time frames, other key levels over here, we've got this 21K, or it's just above 21K. I'll narrow it down on lower time frames. This is in line with the 382. Then we've got our key support on the higher time frames, which is about 18.5, probably closer to the 18K level. Again, we'll zoom it in. When we zoom into the lower time frames, we'll get the exact levels. And we've got this other support here at 16K. And a few people were asking me why the 16K level isn't more important. Well, that's because we don't have that much data. Nothing here shows the 16K is super important. If we zoom out, there's that top there, but this price action is just euphoria, greed, absolute madness. I don't put too much weight onto it. So what we do have is a lot of data points showing this 18K level is significant. You can see price action there, acted as support there, acted as support twice here, first on that test, then on that test. And then we had a huge crash down, held this level, and then a big pump up. That looks like more of a deviation from standard price action than a significant level by itself. That's how I do my TA, and it works for me. But yeah, obviously I'm not going to ignore it, and I'll pay attention once we do get down there. So this is the weekly highest time frame view, and now what we do is we zoom into the daily. Now what the daily does is it lets us pinpoint these levels a bit. So I bring this level down a little bit more, so it syncs up with the price action over here. So at the 24K level, we've got it a little bit more synced up with this, and also incorporates that, and that data point a lot nicer. There is also an argument for 24.5K because we do have this other resistance there. So anywhere in this zone, just treat it all as resistance. Next, I'd adjust this level over here a little bit higher, just above 21K, synced up with this resistance there, this key breakdown level there. Here you can see price action lining up really nicely back here, there again. So again, another significant level. And if you notice on the weekly, you could see that bearish trend clearly. On the daily, you can't really see it as much. This looks pretty bullish because all the moving averages are crossing over, price action's going up, it hasn't retraced much, and if you don't zoom out, you fall into this huge trap of thinking, oh, I should just be super bullish over here. But because we have the big picture in mind, I am still only cautiously bullish here. Now, what does that mean? Cautiously bullish. Am I just hedging against being wrong? No, it means I'm slightly less likely to take this long trade over here, because if we were in a bull market, I'd absolutely turbo buy this 382 retracement support here and bet on the price bouncing up and eventually breaking that level. That would be a really good play because that's how you trade the bull market. But because we're in a bear market, what that means is either I don't take this trade or I reduce my size. Remember, those are two options. You can just reduce the size of your trade, not take as an aggressive a position if you're not as confident, or you just ignore the position overall. Similarly, it means in this zone here, I'm going to be bearish. So if the price breaks down from here and hits there, that means I'm much more likely to be bearish, take up a bearish position over there and go for a short. And in fact, this is a fantastic short opportunity here. Absolutely loads of space between the 21K level and the 18K level. I don't expect it to be an extremely clean move just because we do have a lot of price action over there. But given how quickly the price has pumped up, I'm still expecting to see a more aggressive correction. And I do want to catch that, potentially retest over here of the 100-day moving average. So what it means specifically, if I see a bit more price action there, is once I enter my short, when we break this level, I may take my profit in chunks. I may move my stop loss a little bit. So once we get to say here, I may have a take profit here, another take profit there. Why? Because, well, price might bounce off of this level. This could be an area of struggle for the price, and I expect that preemptively. Now, the other key upcoming area is going to be up here, where we can take the cautiously out of cautiously bullish and just enter straight up bullish, because this is fantastic. We get above this resistance here between 24K and 25K, we've got a clean move up to 30K. There's not much resistance at all, maybe at the 28K level, but by that point, we're already nicely in profit and the whole market should be doing well as well. Plus, altcoins will be fantastic to trade over here because now we're looking at like a huge move from Bitcoin. Not only this big 54% pump, by the end of that, we'll be close to 100%. And when Bitcoin moves 100%, the altcoin market goes absolutely wild. And 100%, I'm going to be sharing more altcoin analysis. Right now, I still want to stick to Bitcoin because I think it's the cleanest and easiest to trade. I mean, just look at this move. Breakout. Obvious resistance at this breakout level, another breakout, clear weakening of price action, failure to break resistance, down to key support. Like, this is just textbook trading. Sure, it's not going 50, 100x, but trade this with leverage. Maybe use my Phemex link in the description below, and 100% you're going to do really well on this move. And I also promote this a lot, which is trade one asset. Like, if you're new to trading, if you're not profitable yet, pick one thing and get really good at that. And you can get really good at altcoins, but the thing is, the altcoin market constantly changes. The narratives, the play styles, there's some similarities within how they tend to pump and dump. But the thing that's lasted me for years are my trading systems on Bitcoin and Ethereum. Everything else I have to constantly adapt and constantly change, and it's a lot of work. But I always know, as long as I keep my Bitcoin and Ethereum trading systems tight, mainly Bitcoin these days, I have income coming in from trading no matter what. And it's consistent and it's predictable. I know when to trade, I know when to stay out of the market, I've got a good read on the asset, and this is what you want to develop. This is what makes you actually really comfortable. You always know you can make income trading. That's the freedom. It's not lying on a beach, it's knowing you have this skill and ability to always make money in the markets. So I've marked this out before as well, but this is our Valhalla region above the 30K because the market will be more neutral now. Whenever we're in a situation like this, we don't need to be cautiously bullish anymore. We can just be straight up bullish because if we're here, if we see price action like this in the Valhalla zone, it means price is very likely going to continue going up and doing well, and I would definitely be entering along in a position like that. Then we've got the danger zone over here and another bearish zone over here. So what exactly does that mean? Here we go for the reactive shorts. That means as soon as we lose this level, I enter my position aggressively and expect us to come back down and then actively manage the position to exit at whatever level I see fit. The price action is going to constantly evolve. Here, in this zone, it's more of a predictive zone because the big money play is either going to be wait for the reaction breakout of this level here or start setting up a short position, much like we did here. Look, this is a predictive play. We've got this breakdown level over here. Price hits resistance, clearly weakening, comes down, bounces. We expect a weak bounce. We enter the short here. We put our stop loss up here and we put our take profit around here. This is a predictive short I shared well before it happened, not just hindsight analysis that we can set up. Similar play to that over here would be extremely powerful because you'd set your stop loss and then your profit target, you just let it run with the trailing stop loss. Like this is the shorter play where you enter your predictive position and then you just trail the price and you can get absolutely huge returns on something like that. But we'll cover that when we get there. If you want this sort of analysis at that price point, don't forget to subscribe. That is everything from me.